Aris Mining Corporation has positioned itself as a primary vehicle for consolidation and growth in South America, led by a management team with a storied history of value creation. Headquartered in Vancouver and maintaining a primary operational focus in Colombia and Guyana, Aris Mining represents a strategic evolution of its predecessor companies, GCM Mining and Aris Gold. The company's current trajectory is defined by a buy-and-build strategy that aims to transition the firm from a mid-tier producer with approximately 210,000 ounces of annual production into a senior gold producer, targeting a run rate of 1 million ounces per year. This ambition is underpinned by two high-grade producing assets in Colombia, the Segovia Operations and the Marmato Mine, and a robust pipeline of development projects, including Soto Norte and Toroparu. The investment thesis for Aris Mining is multifaceted, resting on the pillars of management pedigree and operations in high-grade underground environments, and a unique social license achieved through the formalization of artisanal mining partnerships. Historically, Colombian mining has been viewed with caution by international capital markets due to security concerns and informal mining conflicts. However, the recent 2025 settlement of a long-standing arbitration case with the Republic of Colombia and the successful implementation of the contract mining partner (CMP) model at Segovia have significantly de-risked the company's regional presence.
Financially, the company has demonstrated remarkable earnings power, with third-quarter 2025 results showing record revenue of $253.5 million and adjusted EBITDA of $131.1 million, driven by the commissioning of the Segovia mill expansion and favorable gold price tailwinds. Management and strategic governance. The primary catalyst for institutional interest in Aris Mining is the concentration of leadership talent that has successfully scaled previous mining enterprises to multi-billion-dollar valuations. The company is led by Chief Executive Officer Neil Woodyer and Chairman Ian Telfer, two figures who are widely regarded as architects of the modern gold mining industry. Neil Woodyer, who founded Endeavour Mining and grew it from a single-asset company in West Africa into a top-tier global producer, brings a disciplined approach to operational optimization and aggressive M&A. His career has been defined by his early career metal trades in Chile and his successful establishment of Endeavour Financial in Vancouver. Ian Telfer's track record is equally distinguished, having served as the former chairman and CEO of Goldcorp. Telfer is credited with the transformation of Wheaton River Minerals from a $17 million junior into a $50 billion major, alongside strategic advisor Frank Giustra. His ability to identify and acquire Tier 1 assets during periods of market pessimism has been a hallmark of his career, as has his innovation in creating Silver Wheaton, now Wheaton Precious Metals, the world's most valuable royalty and streaming company. The partnership between Woodyer, Telfer, and Giustra at Aris Mining mirrors the early stages of their previous successes, suggesting a high probability of successful execution of the current million-ounce growth plan.
The governance structure is further bolstered by a diverse and influential board of directors that balances technical expertise with Colombian institutional knowledge. Directors include Germán Arce Zapata, the former Minister of Mines and Energy for Colombia, and Mónica de Greif, a former chairwoman of Ecopetrol and Minister of Justice in Colombia. Other notable directors include David Garofalo, former CEO of Goldcorp and Hudbay Minerals, and Ati Ru, a metallurgical engineer with extensive operational experience at Equinox Gold and Endeavour Mining. This board composition provides Aris Mining with the necessary political and social connections to secure permits and maintain its social license in a shifting political environment. Operational Deep Dive, Segovia Operations. The Segovia Operations in the Antioquia Department of Colombia serve as the company's cash flow engine and its most significant current producer. Segovia is characterized by its exceptionally high grades, with current mineral reserves averaging 10.8 grams per ton of gold. The operation comprises four main underground mines, El Silencio, Providencia, Sandra K, and Carla, situated within a district that has been in production for over 150 years. In 2024, Segovia produced 187,583 ounces of gold, and following a significant capacity expansion, the operation is projected to produce between 210,000 and 250,000 ounces in 2025, with a target of 300,000 ounces by 2026.
A critical operational milestone was reached in June 2025 with the commissioning of a second ball mill, which increased processing capacity by 50%, from 2,000 TPD to 3,000 TPD. This expansion was completed on time and within budget, reflecting the management's focus on disciplined project execution. The expanded facility is fully integrated into the existing infrastructure, utilizing shared circuits for crushing, flotation, leaching, and tailings filtration. The impact of this expansion was immediately visible in the third quarter 2025 results, where total tons milled reached 219,550, a 31% increase over the previous quarter. The economic profile of Segovia is strengthened by its dual-segment structure, owner mining and contract mining partners, CMPs. The owner mining segment, which accounts for approximately 50 to 55% of production, reported an AISC of $1,452 per ounce in the third quarter of 2025, significantly lower than many international peers. The CMP segment involves partnerships with formalized small-scale miners who manage their own operations on the company's land and supply mill feed to Aris Mining's processing plant. This partnership model allows Aris Mining to benefit from incremental gold sales with a relatively fixed margin, which averaged 44% in the third quarter of 2025, well above the full-year guidance of 35% to 40%. This model not only optimizes mill throughput, but also serves as a robust social risk management strategy by providing legal, safe, and profitable opportunities for local miners. Expansion and technical strategy at Marmato. The Marmato mine, located in the Caldas department, is currently the site of one of the most significant mining expansions in South America. Historically, Marmato has been a small-scale producer from the narrow vein zone, upper mine, utilizing labor-intensive methods to produce roughly 25,000 ounces per year. However, Aris Mining is in the midst of constructing the Marmato lower mine, also known as the bulk mining zone, to access the large-scale porphyry-hosted gold deposit beneath the existing mine.
The expansion project, which began construction in late 2023, includes a new portal and decline, a dedicated 5,000 TPD CIP processing facility, and the introduction of mechanized mining methods. As of late 2025, the development of the main access decline had reached 580 meters of the planned 1.7 kilometers, with completion targeted for August 2026. The project is on track for its first gold pour in the second half of 2026, which is expected to increase total production from the Marmato Complex to over 200,000 ounces per year. The geology of Marmato supports this large-scale investment, with measured and indicated mineral resources of 6 million ounces at 3.0 G per T gold. The funding for this expansion is partially secured through a precious metal stream with Wheaton Precious Metals, with approximately $82 million in stream funding remaining as of late 2025. The company's total construction funding requirement for the Marmato bulk mining zone is estimated at $168 million, which is well covered by its current cash position of $417.9 million. This expansion is a key pillar of the company's strategy to reach a production run rate of 500,000 ounces per year across its current operating mines. Soto Norte, Strategic Consolidation and Redesign. The acquisition of the remaining 49% interest in the Soto Norte Project from Mubadala Investment Co. in late 2025 was a transformative event for Aris Mining's long-term production profile. Prior to this deal, Aris Mining held a 51% operating stake. By securing 100% ownership for a consideration of $80 million, comprising $60 million in cash and 1.74 million common shares at a deemed price of $11.50 per share, Aris Mining now has full strategic control over one of the most attractive undeveloped gold-copper assets in the Americas.
Located in the Santander department, Soto Norte is a world-class deposit with proven and probable mineral reserves of 4.6 million ounces at 7.0 gram per ton gold. The results of the 2025 Pre-Feasibility Study, PFS, highlight the project's robust economics, outlining a 22-year mine life with an average annual gold production of 263,000 ounces during the first decade of full operations. The study estimates an after-tax NPV of $2.7 billion at a 5% discount rate and a base case gold price of $2,600 per ounce, with an impressive IRR of 35.4%. Recognizing the environmental sensitivity of the Santurbán region, Aris Mining redesigned the project from its original 7,000-plus TPD scale to a more socially and environmentally responsible 3,500 TPD underground operation. The processing facility is designed to use no cyanide or mercury, instead producing gold-rich copper and pyrite concentrates for export and international refining. This strategy significantly reduces the environmental footprint and local emissions. Furthermore, the company has dedicated 750 TPD of mill capacity to process material from local community miners, a move that aligns with the government's formalization goals and helps to remove mercury from informal mining practices in the region. Aris Mining is preparing to apply for an environmental license for Soto Norte in the first half of 2026, which would be a major catalyst for the stock. The Guyana Diversification Toroparu Project. The 100% owned Toroparu Project in Guyana provides Aris Mining with critical jurisdictional diversification and a potential third hub for large-scale production. Toroparu is a gold-copper project with an updated mineral resource estimate that supports a high-quality development pipeline. In October 2025, the company announced the results of a positive preliminary economic assessment (PEA) for Toroparu, demonstrating robust economics with an after-tax NPV of $1.8 billion and an IRR of 25.2% at a $3,000 gold price.
The project is located in the Cayuni-Mazaruni region of Guyana, near other significant gold discoveries such as G Mining's Oko West. Aris Mining is currently advancing a pre-feasibility study, PFS, for Toroparu, which is targeted for completion in the second half of 2026. The completion of this study will be a prerequisite for a formal construction decision, positioning Toroparu as the next growth project following the ramp-up of the Marmato bulk mining zone. The inclusion of Toroparu in the development pipeline allows Aris Mining to project a long-term production run rate toward its million-ounce goal while reducing its overall concentration in Colombia. Financial strength and capital structure analysis. Aris Mining's financial performance in 2025 has been characterized by record-breaking results across all key metrics, providing the company with the balance sheet strength needed to fund its organic growth pipeline. In the third quarter of 2025, the company reported revenue of $253.5 million, a 27% increase over the second quarter of 2025, and nearly double the revenue from the same period in 2024. This surge was driven by a 25% increase in gold production to 73,236 ounces and higher realized gold prices. Adjusted EBITDA reached a record $131.1 million for the quarter, bringing the trailing 12-month adjusted EBITDA to $352.0 million. The company's ability to generate cash from operations has also improved significantly, with $90.8 million of cash flow after sustaining capital and income taxes in the third quarter. As of September 30, 2025, Aris Mining held a cash balance of $417.9 million, providing it with substantial liquidity. This cash position was further supported by $114.8 million in proceeds from the exercise of the July 2025 warrants and the $22 million sale of the non-core Juby Gold Project in Ontario.
The company's capital structure as of late 2025 is well positioned for growth, with a manageable debt load and no remaining convertible securities following the 2025 warrant expiry. Long-term debt consists primarily of $450 million in senior unsecured notes bearing an 8.000% interest rate and due in 2029, and $28 million in gold-linked secured notes bearing a 7.5% rate and due in 2027. Net debt was reduced to $64 million by the end of the third quarter of 2025, down from $241 million at the end of 2024. This rapid deleveraging, combined with high EBITDA growth, has resulted in a net debt-to-EBITDA ratio close to zero, significantly lower than the industry average of 1.1x. The arbitration settlement, a paradigm shift in social license. A watershed moment for the company's geopolitical risk profile occurred in November 2025 with the announcement of a comprehensive settlement agreement with the Republic of Colombia. This agreement brought an end to an ICSI'd arbitration case originally initiated in 2018 by Grand Colombia Gold, which had sought over $700 million in damages related to operational disruptions and security threats. The settlement is notable for its move away from traditional cash payouts towards a zero-cash compensation model structured around mutual performance obligations. The agreement establishes 3 pillar agreements that will remain in effect for 10 years, an agreement for mining formalization at Marmato with the Ministry of Mines and Energy, a collaboration agreement with the National Police, and a cooperation agreement with the Ministry of Defense. This settlement effectively aligns the interests of the Colombian government with the success of Aris Mining's operations, ensuring enhanced security and political support for its expansion and development projects.
This resolution is the first of its kind in Colombia and represents a major de-risking event for the company. By resolving a contentious legal dispute and replacing it with a cooperative framework, Aris Mining has demonstrated a sophisticated approach to political risk management that is likely to serve as a template for other mining companies operating in complex jurisdictions. The settlement not only improves the company's operating environment, but also strengthens the foundations for the long-term success of projects like Soto Norte. Market valuation and peer comparison. Valuation analysis of Aris Mining, ARMN, indicates that the stock trades at a significant discount relative to its peer group and the intrinsic value of its development pipeline. On a relative basis, the company trades at approximately 0.35x its net asset value, P over NAV, compared to a mid-tier peer average of 0.6x. Its forward price-to-earnings, P to E ratio, is estimated between 4x and 7.3x, representing a discount of roughly 70% compared to the gold mining industry average of 13.5x. Furthermore, at late 2025 market prices, the company is valued at roughly 2x its consensus 2026 EBITDA, while comparable mid-tier peers typically trade between 8x and 12x. Intrinsic valuation is supported by a massive resource base. The Soto Norte Project alone has a projected after-tax net present value, NPV, of $2.7 billion at a 5% discount rate and a $2,600 per ounce gold price, while the Toroparu Project adds an additional $1.8 billion in NPV at $3,000 gold. Analysts remain highly bullish on the stock, with an average 12-month price target of $19.41 USD, implying a potential upside of approximately 24% from late 2025 levels.
Consensus analyst ratings for the company are buy, with target prices suggesting an upside of 28% to 44% from late 2025 levels. The discount is historically attributed to jurisdictional risk in Colombia, but the record EBITDA margins, the ICSID settlement, and the institutional support of major shareholders like MMCAP, Copernic, and VanEck suggest that a market re-rating may be imminent as the company executes its growth catalysts. Cash flow analysis. The cash flow analysis highlights Aris Mining's transition into a high-margin producer capable of self-funding its ambitious growth strategy. In the third quarter of 2025, the company reported record financial results, including revenue of $253.5 million and record adjusted EBITDA of $131.1 million. Operating cash flow after sustaining capital and income taxes reached $90.8 million for the quarter. Notably, the company generated positive free cash flow of $42.6 million after accounting for significant expansion capital investments at its Segovia and Marmato sites. As of late 2025, Aris attains a robust liquidity position with a cash balance of $417.9 million and net debt reduced to $64 million. This strong cash position fully covers the $168 million funding requirement for the Marmato bulk mining zone expansion. Future cash flows are expected to scale rapidly as the company targets an annual production run rate of 500,000 ounces by 2026, with consensus forecasts projecting EBITDA exceeding $500 million in 2026.
Forward outlook and strategic milestones for 2026-2027. Aris Mining enters 2026 with a clear pathway towards its next stage of production growth and value creation. The primary catalysts for the coming 2 years include Segovia ramp-up, continued production growth from the expanded mill targeting 300,000 ounces per year by 2026. Marmato first gold. The first gold pour from the new bulk mining zone is expected in the second half of 2026, marking the achievement of the 500,000 ounce per year consolidated production target. Soto Norte permitting. Submission of the environmental license application in the first half of 2026. A successful permit would significantly increase the company's net asset value. Toroparu progression. Completion of the PFS in the second half of 2026, moving the project towards a formal construction decision. Financial growth. Analysts project that earnings and revenue will grow by 85.6% and 21.4% per annum, respectively, over the next 3 years, with a forecasted return on equity of 21.8% by 2028. The company's ability to fund these projects organically through its high operational cash flows and substantial cash reserves positions it uniquely among gold juniors and mid-tiers. The buy and build strategy, while capital-intensive, is supported by a management team that has demonstrated its ability to navigate identical cycles at Endeavor and Goldcorp.
Conclusion and risk assessment. Aris Mining Corporation presents an investment proposition for those seeking high-growth exposure in the gold sector. The company's strengths, a world-class management team, high-grade cash-flowing assets, a fully funded expansion pipeline, and a sophisticated social license model, are balanced by the inherent risks of mining in South America.
While geopolitical volatility and permitting hurdles remain potential headwinds, the recent arbitration settlement and the redesign of the Soto Norte Project demonstrate a high level of proactive risk mitigation. The company's record 2025 financial performance and significant deleveraging provide a robust foundation for the multi-year expansion at Marmato and the eventual development of Soto Norte and Toroparu. If Aris Mining successfully executes its target of 500,000 ounces in 2026 and continues to de-risk its million-ounce pipeline, the current valuation discount is offering potential returns for long-term investors. In an environment where Tier 1 gold assets are increasingly scarce, offers Aris Mining high-grade portfolio and strategic positioning in the mid-tier space.